Good evening, it's Brian Shannon from Alpha Trends Blogspot. Today is June 4th, Monday, and we're going to go ahead and take a look at some stocks we're trading on Tuesday. This stock shouldn't look unfamiliar to anyone who's been looking at this blog for the last couple months. This is AdTran, symbol ADTN. We're looking at a weekly time frame, and I've said numerous times that it's a great stock, great looking stock for an investor. And so far as trading goes, it's just frustrated us numerous times by not getting going and kind of stopping us out for small gains or break even, that sort of thing, or small losses rather. But the stock still looks like it's poised for gains. Let's look at the daily time frame. You can see it move past some short-term resistance last Thursday. It did so on a little pickup in volume, and it's holding on to those gains. So I think the stock can get going once again. Here's how I want to try it this time. I'd like to buy the stock above $27.14. and then put a stop down at about $26.89, so just below that the afternoon low there, and looking for a target of $28 a share. That'd be 25 cents of risk for the opportunity to make 86 cents. Once again, though, for investor, I think you should just keep raising your stop up. The stock acts good. Shares of Teva Pharmaceutical, TEVA is the symbol there. This stock is in a nice uptrend. Just found support on a little shakeout at that 50-day moving average. Weekly time frame, you can see it still looks like it's got room. But here on the 10-minute time frame, what I think we want to do is buy it above $39.75. Once the stock gets above that level, it looks to me like the buyers are back in control. We put our stop below that 5-day moving average and the afternoon low at $39.48. So that'd be 27 cents of risk. I think this stock has the ability to reach at least this $41 level, where it was just a week and a half ago. So that would give us $1.25 of potential upside and just 27 cents of risk. Another drug stock, I think, or biotech, is this Supergen. SUPG is the symbol in here. And this stock had it had a couple real nice little stair steps higher over here, and you can see that the volume peaks typically near these turning points. And we saw some increases in volume on the way up, followed by low volume consolidations. And it's undergone a longer term consolidation here over the last month and a half. But this rising 50-day moving average seems to be acting as support, and it looks like the buyers are now getting back in control of this stock. Now, what I'm seeing here on this 10-minute time frame is the stock was pretty much up steady all day on Monday. I'd like to see it pull back to at least $6.60. Once it gets below that level, I think then you want to look for strength to buy the stock above $6.65. So let's wait for a little bit of a pullback, just because I think it'll probably get down, probably even towards this level here, towards about 55 cents. But once it hits 665, I think you want to then buy strength above 665. We can put our stop at about $6.53, and that would give us a risk in this stock of 12 cents a share. Target, I think, $7.50 looks reasonable for a return to that area. So that'd be 85 cents of potential upside for just 12 cents of risk. Halliburton, HAL is the symbol there. And this stock is, like a lot of the oil service and oil-related companies, breaking past some resistance and then a nice uptrend again. So it broke past this consolidation area in here. Now the stock on a daily time frame, it had this run up, consolidated in here. We're getting a little return of volume in the stock. And on the 10-minute time frame, it looks like it moved past a little bit of resistance here. What I'd like to see in here is another pullback move. Let's wait for the stock to pull back to $36.25 and then buy it on strength above $36.40. Be patient with this one because it is listed stock, and they probably will bring it down to at least that level, maybe a little bit lower. I think then once you're in the stock at $36.40, you can protect yourself with a stop at about $36.15. That would give us just 25 cents of risk in there, and I think you're looking at your target right here at about $37.50. So that 37 reaches the $37.50 level, that'd be $1.10 of upside for just 25 cents worth of risk. Now, I'm not recommending this stock as a short, but I am suggesting that you take a look at it because it's looking pretty weak, and that's Netflix. On the weekly time frame, you can see it looks like it's breaking down. And on the daily time frame, it's having a lot of trouble in here as well. On the 10-minute time frame, I think you want to look at this stock and consider it as a potential short down near about 21.35 or lower.